Hi guys, I'm Karunya Rao and an Ideas for Profit all eyes on Sansera Engineering. In an ongoing spree of IPOs, Sansera has opened for subscription from September 14. It's a leading auto technology company involved in engineering-led integrated manufacturing of complex and critical precision engineered components across automotive and non-auto sectors. The IPO comes at a time when the auto sector is expected to offer significant opportunities in the years to come. Furthermore, it's diversifying across electric as well as hybrid vehicles, which offers multifold opportunities going forward. Now, the IPO is reasonably priced and hence we advise investors to subscribe for the long term, given massive growth opportunities and the company's stellar operating performance. The issue size at the upper end of the price band, which is 734 to 744 rupees, is at 1283 crores. The entire issue is an offer for sale from promoters and promoter group. The implied market cap at the upper end of the price band is going to be close to 4,000 crores. Sansera is a leading, well-diversified, tech-driven automotive component manufacturer which specializes in manufacturing and supplying a range of precision forged and machined components as well as assemblies that are critical for engine, transmission, suspension, braking, chassis and other systems for two-wheelers, passenger vehicle and commercial vehicle segment. In the non-auto segment, it supplies precision components to aerospace, off-road, agriculture and other segments. The company supplies its products to original equipment manufacturers, OEMs, across the US, Europe, India and several other countries. On the back of technological know-how and superior product quality, the company has established itself as a leading auto component manufacturer both in India and abroad. The company has been able to partner with the who's who of the industry across the world. In the domestic market, it has partnered with the likes of Bajaj Auto, Hero Moto, HMSI, TVS, Royal Enfield, Maruti and so on. Overseas, it has partnered with the likes of KTM, Triumph among several other leading players. It has constantly been expanding its consumer base or rather customer base. It has added 7 new customers over the last 2 fiscals. The company has a long relationship with its customers. It has relationships spanning 10 years or more with 12 of its top 20 customers. Sansera is also well diversified across product lines, geographies, vehicle segments and customers. One of the key differentiators for the company is its ability to diversify into tech-agnostic products and to cater to multifold opportunities in electrification of vehicles. It recently secured business for multiple drivetrain components specifically for hybrid EVs from a leading global PV maker. It also supplies aluminium forged products developed for high-end two-wheelers and EVs. With growing lightweighting and electrification trends, the company plans to cater to these requirements. It is in the process of setting up a dedicated facility for hybrid and electric components at one of its plants in Bangalore, which is expected to be commissioned during FY22 itself. In a bid to move towards the use of clean energy, the world has been moving towards battery-driven vehicles. The progress thus far has been slow. However, with tech advancement and reduction in costs, EV penetration is expected to grow exponentially. The domestic PV segment is expected to register a CAGR of 10% over FY21 to 26. In the domestic two-wheeler segment, CRISIL Research estimates scooter segment to grow at a rate of 15.8% over the same period, followed by motorcycle at 9% and mopeds at close to 6%. Domestic CV segment expected to register a CAGR of 13%. In the EV segment, two-wheelers are expected to grow at 70 to 74% over FY21 to 26. The key growth drivers include preference for personal mobility amid the pandemic, improving macroeconomic situation, raising disposable income and low penetration. Over the years, Sansera's financial performance has been very robust. Now, this is clear from the fact that despite a 2.3% growth in top line over FY19 to 21, the company has been able to register an average EBITDA margin of 17.8% in the same period, in line with the best in the industry. The superlative margins is a result of its tech-driven precision components. Of course, efficient capital allocation and management have helped the company maintain an average ROCE of 15.7% between FY19 and 21. Of course, the main risk that we foresee at this juncture is any weakness in demand that could lead to significant impact in the financial performance. In terms of valuation, the issue is at a PE of 29.6 times of FY22 and 24 times FY23 earnings, which we believe is at a reasonable level. Sansera's valuation is clearly at a discount with its peers on the valuation parameter. Given the strong fundamentals of the business, sound financial track record and massive growth opportunity, the issue may be subscribed for the long term for steady earnings visibility.